Hello dear students, here we are going to quickly go through all the 20 questions in this May 2025 RTP. So this is basically like a quick discussion, not going to that particular area and discussing the provisions, assuming നിങ്ങൾ already അത് പഠിച്ചിട്ടുണ്ട് എന്നുള്ളൊരു assumption we will be discussing all this 20 questions quickly. Okay, so without wasting time, let's start with question number 1. Question number 1 and 2 are MCQs. So in the books of G Limited, question number 1. In the books of G Limited, closing inventory as at 31st March 2024 amounts to 10,40,000 on the basis of FIFO method. Okay. The company decides to change from FIFO method to weighted average method for ascertaining the cost of inventory. So it is change in accounting policy. On the basis of weighted average method, the closing inventory amounts to 8,80,000. Realizable value of inventory is 12 lakhs. So cost and NRV, whichever is lower, so we have to show it 8,80,000. What will be the inventory value in the books? What disclosure should be given in the financial statements on 31st March 2024? So the value of inventory will be 8,80,000 and the fact that the valuation method has changed should be disclosed. Yeah, it seems to be correct. Let's read the other options also. The value of inventory 12 lakhs. Anyway, no. Value of inventory will be 12 lakhs. No. The value of inventory will be 8,80,000 and full disclosure with the amount the valuation method has changed should be disclosed in the financial statements. Between two, which one do you think as the most appropriate answer? It is D. Here the fact should be disclosed. Here full disclosure is to be done. We have studied whenever there is a change in accounting policy, fact that there is change, reason for the change, and the financial effect of the change in the current year or which is expected to have effect in the subsequent periods should be disclosed. Therefore, the full disclosure, option D is the correct answer. Okay. Now, question number 2. A Limited has a balance of 17,15,000 in the loan account with State Finance Corporation, which is inclusive of 1,15,000 for interest accrued but not due. Okay, the loan is secured by hypothecation of the plant and machinery as per Schedule 3 to the Companies Act 2013. Loan is to be disclosed in the balance sheet as? Of course, this loan balance of 17,15,000 includes 1,15,000 interest accrued, which is a current liability. Yes or no? So, what is the most appropriate answer? Let's find out. Disclose 16 lakhs as secured loan under long-term borrowings. That is correct. But we need to select the most appropriate one. Disclose 16 lakhs as secured loan under long-term borrowings and 1,15,000 under short-term borrowings. Okay, but is it short-term borrowings, interest accrued? Under current liability, we have under current liabilities, we have short-term borrowings, short-term provisions, trade payables, other current liabilities. So just think, interest accrued, is it short-term borrowings? It is not short-term borrowings. So disclose 16 lakhs as secured loan and 1,15,000 in other current liabilities. So this is the most appropriate one. Anyway, let's read the last one. No disclosure. No. So here option C. Okay. Now general MCQs. Most byproducts as well as scrap or waste materials by their nature are immaterial. Thus, these are measured at scrap waste materials are measured at net realizable value. Cost and NRV, whichever is lower, is not there. So you just measure at net realizable value, NRV. Okay. Now descriptive questions, question number 1. See, this is the only question which I am going to leave. What do you mean by accrual in reference to AS1? So AS1, we have fundamental accounting assumptions. Of that, one of such assumption is accrual. So what is accrual concept? Accrual concept is recognizing revenue and cost. That is recognizing income and expenditure as and when it is accrued. You should recognize income or revenue when it is earned. You should recognize expense or cost when it is incurred and not when received or paid. It's not money, it is not cash terms, but on accrual basis. So just write few points on it. So that's it. I'm not going through that question number 4. Question So let's read this question number 5. From the following information provided by LMN Limited for the year 2024, you are required to compute the closing inventory AS2. I think AS2, this question is manageable. Let's see. Raw material A, closing balance 700 units. Cost price including GST is 280. Cost price including GST is 280. I will deduct. Cost price including GST is 280. ITC available. Input tax credit available. What you should do if ITC is available? It is refundable, so it should not form part of cost of inventory. So 280 minus 25, 255. Freight 35, handling charges 20. So your cost of raw material A is 310. Replacement cost is 200. So cost 310, replacement cost 200, whichever is lower 200. So the inventory raw material A should be valued at 200. Can I say that? No. It is based on a specific provision as per AS2. ഒരു specific provision ഉണ്ട് AS2. What is that specific provision as per AS2? അതായത് നിങ്ങൾ raw material ഒരിക്കലും raw material ആയിട്ട് വിൽക്കുന്നില്ല. You will not sell raw material as raw material. Then you will convert raw material to finished good and then sell. So the valuation should be based on whether the finished goods are being sold at cost or NRV. If NRV is lower, okay, let's find out. Wait. Closing balance. You have finished goods 1800 units. Materials consumed 280. Direct labor 80, direct overhead 40. So it is coming to 300. No, not 300. I'm sorry, 400. Total fixed overheads for the year is 3,60,000. Yeah, fixed overheads also should be allocated. So fixed overheads cost is 3,60,000. On a normal capacity of 36,000 units and actual production is 30,000 units. What have you studied with regard to this absorption of fixed overheads? Fixed overheads should be absorbed based on the normal capacity or actual capacity, whichever is higher. So 36,000, 30,000, whichever is higher is 36,000. So 3,60,000 divided by 36,000. So rupees 10 fixed overheads also should be added. So 410 is the cost of finished goods. Now calculate the value of closing stock when NRV is 500 per unit. Now listen. There is no raw material loss here. There is no raw material loss because after including the raw material, the cost of finished goods is 410, but you are still able to sell it at 500 means there is no raw material loss. Raw materials can still be measured at, I'll show you the answer. Raw materials can still be measured at 310. So 700 units into 310 and 1800 units into 410 and 500, whichever is lower, 410. This will be the value of closing stock. Now, if NRV of finished good is 380, finished goods are manufactured at 410, cost is 410, but net realizable value is only 380, then finished goods are not able to recover its cost. Now there is a raw material loss. Raw materials should be valued at 200 and finished goods are to be measured at 380. Are you clear? So what is the rule of raw material valuation? Raw material should be valued at cost and NRV, whichever is lower. However, if the finished goods to which this raw material is applied, ഏത് finished goods ലേക്കാണോ നിങ്ങൾ raw material apply ചെയ്തത്, if that finished goods can be sold at cost or cost plus profit, sell ചെയ്യാമെങ്കിൽ, if that is capable of being realized, raw material cost also can be recovered. No need to write down the value of inventory raw materials to its replacement cost. Are you okay? So if there is a doubt, please comment below. I'll clarify it. Now, AS3, our favorite cash flow statement. Question number 6. From the following data of Vishnu Limited, prepare cash flow statement from operating activities under direct method. Aha. Opening stock, closing stock. Do we need for a direct method opening inventory, closing inventory? Don't know. Let's see. Trade receivables. Yes. Normally we need trade receivable information to find out collection from debtors or cash collected from cash sales and all. Cash and cash equivalents. Only direct method. So we don't need cash and cash equivalents. Trade payables, provision for tax. Now a P&L is given and they are asking you to compute, prepare cash flow statement under direct method. Sales. So sales in the P&L will include cash and credit. Cost of sales, cost of goods sold is opening stock plus purchases minus closing stock. Interest income, fire insurance claim received is an extraordinary item. Depreciation, administrative and selling expense, interest expense, foreign exchange loss. Foreign exchange loss is not a cash expense. It is maybe monetary item you restated and അങ്ങനെ വന്ന loss ആയിരിക്കും. Net profit before tax an extraordinary item, less income tax provision, so net profit. Additional information, trade receivables and trade payables include amount relating to credit sales and credit purchase only. That we already know. Trade receivables are related to credit sales. Trade payables are related to credit purchase. Foreign exchange loss represents increment in liability of a long-term borrowing. Yeah, AS11. So there is a foreign currency loan. Maybe $1 lakh taken at 80 rupees, 80 rupees per dollar. Now it has become 83, maybe. So that difference, that increase in liability, not a cash, there is not a cash expenditure. So how do I prepare this cash flow from operating activities? Direct method. So direct method format, I'm thinking first I need is sales. But this is not cash sales. This is cash plus credit sales. So what I'll do, see, there is no collection from debtors information. So what I can do is opening 1,88,000, closing 2,05,000. So if no other cash sales, credit sales, if no other information is given, we'll open trade receivables account. We start with to balance brought down 1,88,000. By balance carry down. So these are the receivables from customers. And this is my trade receivables account. Now trade receivables to sales. Total sales is 85 lakh 50. How much? 85 lakh 50,000. Current year I have done a sales of 85 lakh 50,000. So I should get 85 lakh 50,000 plus 1,88,000. Last year receivables 87 lakh 38,000 I need to collect. Of it 2 lakh 5,000 I have not received. So total cash I have collected is by cash. Total cash collected from customers is 85 lakh 33,000. Yes or no? So cash sales I'll start with 85 lakh 30,000. Collection from debtors also included cash sales and collection from debtors is 85 lakh 33,000. Are you clear? Cash sales and collection from debtors 85 lakh 33,000. Now similarly I need to find out cash purchase, payment to creditors. Cost of goods sold is 56 lakhs. Now what is cost of goods sold? Opening stock plus purchases minus closing stock is 56 lakhs. So we'll find out opening stock and closing stock. Opening 1,65,000, closing 1,20,000. So I'll do opening plus purchases minus closing is 56 lakhs. Correct. So how much will be purchases? Minus 45,000. 55 lakh 55,000. So this purchase is cash purchase and credit purchase. This purchase is cash and credit. So what I'll do? What I'll do is I'll open this creditors account. Opening trade payables. Opening by balance brought down 2,15,000. By purchases 55 lakh 55,000. to closing 1,95,000. So opening payable 2,15,000. Current year total payable 55,55,000 minus what I have not paid is 195. So minus 55,75,000 is the total cash purchases. Cash paid to creditors, suppliers, total 55,75,000. So we got cash sales collection from debtors, cash purchase and payment to creditors. Together we calculated. Now, what is next? Other income. Interest income will you take in operating activities? No. Fire insurance claim, yeah, towards the end we can take fire insurance claim. Then interest expense we will not take, depreciation we will not take, administrative and selling expense has to be deducted. Now tax, income tax current year provision 95. So we will do provision for tax account also. Opening provision 65,000. Current year P&L to provision is 95. Closing provision is 48. So opening provision payable 65. Current year payable 95. Minus still not paid is 48. So what is paid? 1 lakh. Sorry. 1,12,000. So I think with this we can, let's move on to the answer and find out. Cash flow statement. Cash flow statement, yeah. So cash flow statement from operating activities under direct method. Cash received, I think the same figure we got, 85,33,000. Okay, cash purchase paid to suppliers 55,75,000 from working note. Payment of administrative expense. Then cash actually from the in the format we'll get cash generated from operations. From that we'll deduct income tax paid. So less extraordinary, no, not less, I'm sorry, add extraordinary income. So this is cash flow from operating activities. Okay, so that's it. So that's with question number 6. Now question number 7. AS4. Smart Limited closes its books of accounts every year on 31st March. The financial statements for the year ended 31st March are to be approved by approving authority on 30th June 2024. Okay, so 31st March closing, 30th June is the approval date. During the first quarter of 24-25, the following events and transactions has taken place. The accountant of the company seeks your advice, guidance for the following. Smart Limited has an inventory of 50 stitching machines costing 5,500 per machine. Okay, so we have 5,500 rupees is the cost of 50 machines. 50 machines, 5,500 per machine cost. The company is expecting a heavy decline in the demand. Oh, the inventories are valued at cost or NRV, whichever is lower. During the month of April, due to fall in demand, the prices have gone down drastically. The company sold 5 machines during this month, that is April, at 4,000 per machine. So on 31st March 24, cost is 5,500. But we do expect a heavy decline on that at the end of 31st March. Either at the end of 31st March, we estimated that there will be a heavy decline. And in April, we could sell 1 machine at 4,000 only. So we are anticipating a decline at the end of 31st March 2024 itself. So conditions were existing. Therefore, when the conditions are existing or conditions were existing, what is to be done? Adjusting event. So the 50 machines should be recorded at 4,000. So it's an adjusting event because before 30th June itself, there was a decline. And we were anticipating it on 31st March. So it is an adjusting event recorded at 50 into 4,000. Now, a fire broke out in the company's godown on 15th April. Company has estimated a loss of 25 lakhs out of which 75% is recoverable from the insurance company. We have tried this question. Multiple type of, similar type of questions we have tried in class. Here what is to be done? See, we have no idea about the fire on 31st March. No conditions were existing on 31st March. Therefore, this is totally a non-adjusting event. It's a non-adjusting event. No adjustment is required in the books of account. However, if there is a fire, earthquake, something like that happens after 31st March but before the date of approval, you need to check whether going concern principle is appropriate. Here you need to go for an assumption going concern is appropriate because 75% is recoverable. So going concern is appropriate. Hence, nothing. No, it's not an adjusting event. But if going concern is inappropriate, then it becomes an adjusting event. Exception. Okay. So just by going through this, without considering going concern, this is totally a non-adjusting event. Without considering going concern principle, this is totally a non-adjusting event. Now, the company has entered into a sale agreement to sell a property for a consideration of 7,50,000, which is being carried in the books at 5,50,000 at the year end. The transfer of risk and reward and sale is completed in the month of May when conveyance and possession get completed. So what is this? We have tried a similar question, but there is a difference. Here, company has entered into a sale agreement on 30th March. Okay. The type of question which we have done is company has entered into a sale agreement on 30th March and the sale is completed before 31st March, but registration was completed. The legal title was transferred after 31st March. But here the difference is 30th March is the date of sale agreement, okay. But on that date, risk and reward is not transferred. Sale is asset possession is not transferred. So in substance, only sale agreement happened. So it is a non-adjusting event. It is a non-adjusting event because the risk and reward and the sale is completed. Possession is transferred only in May 2024. So it's a non-adjusting event. No revenue can be recognized on 30th March. Okay. Substance over form. In substance, the sale actually happened only in the month of May. But if sale agreement occurred and sale happened, but legal title transferred later, then it can be still considered as adjusting event. Sale entry can be recognized at the end of that 23-24 financial year. Now, the company has received during 22-23. 22-23. So, current year is 23-24. So, this is 22-23. Company has received a government grant of 15 lakhs for the purchase of a machine. The company has received a notice for refund of the said grant on 15th June 2024 due to the violation of some of the conditions of grant during 23-24. So now we got a notice on 15th June. 30th June is the date of approval. 15th June we got a notice for the violation of conditions in 23-24, which means conditions were existing. It's like you have already violated conditions. In 23-24 itself you should have done the refund, but the notice came only in 15th June. Adjusting event. Adjusting event. Okay. So you're required to state with reasons. So you need to, maybe this question is 4 questions for 4 marks or 5 marks. So you need to first give a title as per AS4. What are adjusting, what are non-adjusting? If adjusting, what is to be done? The title, then subpoints 1. So inventories should be valued at 50 into 4,000 and cost NRV. Then fire non-adjusting. If going concern is appropriate, then still non-adjusting. Going concern is inappropriate, then adjusting even. Sale agreement only happened, but sale actually happened only in the month of May. Therefore, it is a non-adjusting event. Then grant adjusting event that you need to write. Now AS5. Net profit or loss for the period, prior period items and change in question number 8 from AS5. Accountant of Hira Limited has sought your opinion with relevant reasons where the following transactions will be treated as change in accounting policy or not. Please advise him. Okay. Till the previous year, the furniture was depreciated on straight line basis. From current year, the useful life of furniture has been changed to 3 years. Come on fast. Change in depreciation method, change in useful life, change in the pattern of future economic benefits. It is change in accounting estimates. Change in accounting estimates. So change in accounting estimates. Now the management decide to pay pension to those employees who have retired after completing 5 years of service from the organization. Such employees will get pension of 20,000 per month. Earlier, there was no such scheme of pension in the organization. Yeah. Have you studied in AS5 a transaction or event which is happening totally new, or transaction or event which is materially different from what was existing? These two cases cannot be considered as change in accounting policies. A totally new transaction or event is not change in accounting policy, or a transaction or event which is materially different, significantly different from what was happening before is not a change in accounting policy. Now, during the year ended 31st March 24, there was change in cost formula. Change in cost formula is change in accounting policy. FIFO to weighted average cost or vice versa is change in accounting policy. AP Limited, a construction contractor, undertakes the construction of commercial complex of K Limited. AP Limited, a construction contractor, undertakes the construction of commercial complex for K Limited. AP Limited submitted separate proposals. We got the question. For each of the 3 units of commercial complex. A single agreement is entered into between the two parties. The agreement lays down the value of each 3 units as 50 lakhs, 60 lakhs and 75 lakhs respectively. Agreement also lays down the completion time of each unit. Comment with reference to AS7 whether AP Limited should treat it as a single contract or 3 separate contracts. So there are 3 conditions here. Here, while reading the question, second sentence itself, they have given, AP Limited submitted separate proposals for each of the 3 units of commercial complex. If separate proposals are submitted, or the contracts can be considered as separate. Point number 1 is separate. I'm not writing. Separate proposals are submitted, then separate. Then each contract is separately negotiated. That is, the customer or the contractor is able to accept or reject a part of or a contract. That is, the meaning is, if I accept contract number 1, then I have to accept all the 3 contracts. ഒന്ന് accept ചെയ്താൽ 3 accept ചെയ്യണം. അങ്ങനെയാണോ? അല്ലല്ലോ. അങ്ങനെയൊന്നും പറഞ്ഞിട്ടില്ലല്ലോ. There is no other information in this question. So, separately negotiated. Then the cost and revenue of each contract can be separately identified. The cost of each contract is separately identified. Completion time of each unit is also mentioned. Then it is separate. Treat it as separate contract. Separate. So first you need to write the provision, study the provision carefully, then you write this. Okay. So how should the AP treat this contracts? 3 separate contracts. Okay. Now, on 1st December 23, GR Construction Company undertook a contract to construct a building for 45 lakhs. On 31st March 24, year ending date, the company found that it has already spent 32.5. Okay, 32.5 lakhs it has already spent, and additional cost of completion is 15.1. Okay, so it is 47.6. What amount should be charged to revenue in the final accounts for the year ended 31st March 24 as per the provisions of AS7? Okay, so first you remember the provisions of AS7 for recognizing revenue and cost. First we need to identify as per AS7, when the outcome of the contract can be estimated reliably. When the outcome of the contract can be estimated reliably, contract revenue and contract cost can be recognized on percentage of completion basis. So first I need to find out 32.5 lakhs already spent out of 47.6. So what is the percentage of completion? 68.28 I'll take 68.28. And also my cost total contract value is 45, but contract value is exceeding 2.6 lakhs. It is 47.6 is my expected cost now. So how you will recognize this revenue? So what is the calculation here? First, 68.28% they are computing. Then 45 lakhs into 68.28, 30.73 lakhs. You can recognize as revenue. So if I prepare a P&L, 30.73 is my revenue, but 32.5 is my cost. So 32.5 minus 30.73. Already a 1.77 lakhs loss is appearing. But is that enough? No. As per the standard, the entire 2.6 lakhs loss should be recognized immediately. So 1.77 minus 2.6, a provision for foreseeable loss of 0.83 also should be recognized. A provision for foreseeable loss of 0.83 should be recognized, so that the total loss will be 2.6. Question number 10. Given below are the following information of BS Limited. Goods of 50,000 were sold, but at the request of the buyer, they were delivered on 15th April. So, delay out of buyer's request. If delay in delivery out of buyer's request, then revenue should be recognized on 18th March. Revenue should be recognized on 18th March itself. Now on 13th January, goods of 1,25,000 are sent on consignment basis, of which 20% of the goods unsold are lying with the consignee. Then goods lying with the consignee cannot be recognized as sales. It should form part of cost of inventory. So only 80% sold to third party end customer can be recognized as sales revenue. 20% cannot be recognized as sales revenue. 1 lakh worth of goods. 1 lakh worth of goods were sold on approval basis on 1st December. Period of approval is 3 months. So December, Jan, Feb, March. After which they are considered as sold. Buyer sent approval for 75% of goods sold up to 31st January and no approval or disapproval received for the remaining goods till 31st March 2024. So we sold on 1st December for 3 months. Period of approval is 3 months. So 3 months period of approval means time. The customer does not have time. So customer should pay. So entire 1 lakh can be recognized as income on 1st March 2024. That is the rule. Okay. So how should I write this answer? You are required to advise the accountants of BS with valid reasons the amount of revenue can be recognized. Always fully read the requirement. Okay, requirement. So here, first I should write about revenue recognition. First a point about revenue recognition. When do you recognize revenue out of sales? When significant risk and reward is transferred to buyer and there is no uncertainty in the ultimate collection. Ultimate collection, if it is reasonably certain, then revenue can be recognized. Then after writing that points, case number 1. 50,000 is lying. So as per AS9, when the goods are delivery is delayed at buyer's request, revenue can be recognized because there is no fault from the side of the supplier. Then consignment basis, there is a 1,25,000 are sent on consignment basis. So there is an uncertainty. What if it is not sold to the ultimate customer? Then it will come back. So wait, revenue can be recognized only up to 80%. In the third case, the customer's time period has expired. In the third case, customer does not have the right to hold it after 1st of March. So therefore, revenue can be recognized. The customer should pay for the amount. should pay for the amount of sales. Should pay the amount of sales. The customer has no right to hold it after 1st March. So revenue should be recognized for the entire 1 lakh. Okay. So you should write proper sentences. Now, question number 11. So there are 20 questions. Question number 11. Srishti Limited contracted with a supplier to purchase machinery which is to be installed in the department A in 3 months' time. Special foundations were required for the machinery which were to be prepared within the supply lead time. The cost of the site preparation and laying foundation were this, which can be capitalized. These activities were supervised by a technician which is employed for this purpose. 45,000 per month into 3 months can be capitalized. The technician services were given by Department B to Department A, which is billed at, oh, so no, it can be capitalized only at cost. Department A is selling at a profit. No, that profit. So 45,000 plus they charge 4,500, 10% profit. So they are charging 49,500. No, it can be capitalized only at 45,000. So Department B transferring to Department A at a profit cannot be capitalized. The machine was purchased at 1 crore 58 lakh 34,000 including GST, of which input credit is available. Okay, so it is 1 crore 58 lakh 34,000 is including GST means 112 into 100 is what we can capitalize. Now 55,770 transportation charges were incurred to bring the machine to the factory site. Capitalize. An architect was appointed at a fee of 30,000 to supervise machinery installation at factory site. Capitalize. Ascertain the amount at which machinery should be capitalized under AS10 considering IGST credit is availed. Okay, very easy, straightforward question. So you can capitalize this 1 crore 58 lakh 34,000 divided by 112 into 100. You can add 55,770. You can add 30,000. You can add this 1,41,870. You can add 45,000 into 3. So what is the answer? Yeah. So this 112 into 100. Site preparation cost. Technician salary 45,000 into 3. Transportation professional fees can be capitalized. Okay. So when I answer as per AS10, property, plant and equipment, all the directly attributable expenditures uh, while constructing or acquiring an asset can be capitalized. Then you should write the calculations and give the final amount to be capitalized. Okay. Okay, question number 12. Legal Limited is engaged in manufacturing of rubber. For its plant, it required machineries of latest technology. It usually resorts to long-term foreign currency borrowings, AS11, for its fund requirements. On 1st April, it borrowed US dollar 1 million for the International Funding Agency, where exchange rate was 63. So spot rate is 63. So 63 million. The funds were used for acquiring machineries on the same date. It is to be used for 3 different plans. Useful life of machinery is 10 years and their residual value is 30 lakhs. Okay. Earlier also, so the residual value I should consider while calculating depreciation. From cost, I should deduct 30 lakhs and then 3 million will be deducted, then divided by 10 is the depreciation. Earlier also, company used to purchase machineries out of foreign borrowings. The exchange differences arising on such borrowings were charged to P&L account and were not capitalized, even though the company had an option to capitalize it as per notified AS11. That is, you remember 46A, para 46A, notification, MCA, notification as per AS11. Now, for this purchase of new machinery, Legal Limited is interested to avail the option of capitalizing the same. Good. Exchange rate on 31st March is 1 US dollar is equal to 62, but it has reduced. 63 has become 62. So 1 will be reduced from the asset rather than recognizing it as income, because they are availing 46A of AS11. Assume that on 31st March 24, Legal Limited is not having any old long-term foreign currency borrowings except for the amount borrowed for machinery purchased on 1st April. Comment whether Legal Limited can capitalize the exchange difference to the cost of asset. Yes. So let's understand from the answer. So initially the asset will be recorded at its spot rate, 63 million. But subsequently there is an exchange gain. Liability reduces. So my entry will be liability to asset, 62. Depreciation will be always charged prospectively. Any change in the value, useful life, residual value, you should do it prospectively. So 62 minus 3 million, that scrap value, divided by 10 years. This will be the asset value. Okay, easy. Now 13. XYZ Limited has set up its business in a designated backward area, which entitles the company to receive from the government of India a subsidy of 20% of cost of investment. XYZ Limited has set up its business. So if a company is setting up its business and you are getting a grant, it should be treated as grant in the nature of promoter's contribution. Having fulfilled all the conditions, the company on its investment of 75 crores received 20%, that is 15 crores. The company wants to treat this receipt as an item of revenue and thereby reduces the losses. Exact study material question, is that possible? No. You should write the provision, promoter's contribution. If the such grant received, it should be credited to capital reserve. It should not be credited to P&L. Then in the given case, company has invested 75 crores and it has received a subsidy of 15 crores. It cannot be recognized as income. It should be credited to capital reserve. Okay. Now AS13. See, AS13 accounting for investments, a question is very much anticipated. Mr. Harsh provides the following details relating to its holding in 10% debentures, fixed income investments. Face value 100. They are treating it as current asset, current investment. 1st April 23. Opening balance. Purchase. Again purchase. Sale. Closing. Due dates 30th June and 31st December. Brokerage 1% on each transaction. And investment will appear assuming FIFO method. So what are the steps to be done? Opening balance 12,500. So I'll prepare the 10 column investment account. 1st April 2023. To balance brought down. If I am writing number 12,500. Face value 12,50,000. Now cost 1,25,000. Should I record anything in the interest column? Yes. Because due dates are 30th June and 31st December. Last interest was on 31st December. So 3 months interest is due. So 12,50,000 into 10 percentage into 3 by 12. We'll record an interest of 31,250. Then 1st June, purchase 9,000 debentures at 98x interest. So what is my calculation? So to bank, I'll record in the particulars to bank 9,000, or we'll write face value 9 lakhs. Interest will be how much? 9,000 or 9 lakhs into 10 percentage into 5 by 12. 37,500. Now cost 9,000 into 98 x interest, 9,000 into 98, purchase plus 1% brokerage, 8,90,820. Then again purchase, but before that 30th June interest entry, 12,500 plus 9,000 into 100 face value into 10% into 6 by 12. By interest, 1,07,500 interest received. Then again purchase, come interest. So 12,000, if I am writing number 12,000 or 12 lakhs into 10 percentage into 30th June. Last interest date is June. July, August, September, October. I will not count November. 4 months. 4 by 12. 40,000 is the interest. And come interest price 115. So 12,000 into 115 plus 1%. minus 40,000. Sorry, not 13,53,800. Now 31st January there is sale, but before sale there is interest. So sale of 13,500 debentures at 110 each come interest. So 13,500 or 1,35,000, not 1 lakh 30. So 13,50,000, 13,500 number or 13,50,000. So 1 lakh, sorry, 11,250 will be the interest. And how much is the sale proceeds? 13,500 into 110 minus 1%. First brokerage will be adjusted, then interest. Whenever there is a sale, we should calculate profit or loss on sale. So to balance brought down, I think we got the same figures. Now to bank, yeah, next interest. Again interest, no, to bank purchase, then again interest, then sale. Whenever there is a sale, we should calculate profit or loss on sale. So sale proceeds is 14,58,900. Cost 13,500 is the number of debentures we sold. So that is on FIFO basis. So first 12,500 cost is 12,25,000. Next 1,000 cost will be 8,90,820 divided by 9,000 into 1,000. Not into 890,820 divided by 9,000. 98,980. So total 98,980. So total cost is 12,25,000. 13,23,980 is the total cost. But sale proceeds is 14,58,900. So there is a gain of 1,34,920. So once more, 14,58,900 is the sale proceeds. Cost under FIFO method. So first 13,500 we sold. First 500 cost of debentures is 12,25,000. Then 9,000 debentures cost is 8,90,820. So 8,90,820 divided by 9,000 into 1,000. 98,980. So total. This is my cost, but this is my sale proceeds. So there is a profit of 1,34,920. What is the journal entry? Investment to P&L, to P&L, to P&L, 1,34,920. Now by balance. Balance. I'll take the balancing figure 20 lakhs. Immediately I should calculate the accrued interest. 20 lakhs into 20 lakhs into 10 percentage into 3 by 12, 50,000. Now balance interest column and transfer to P&L. Balance cost column and record at cost and NRV, whichever cost and market value, whichever is lower. And balance cost column, cost should be valued at cost and market value, whichever is less. So have they given the market value? Market value is given as 115. 20,000 debentures into market value they have given as 115. So 20,000 into 115, 23 lakhs is the market price. Cost is 21,45,640. So it should be recorded cost and market price, whichever is less. Very easy and straightforward. Alle. Now question number 14. A summarized balance sheet of GAN Limited and Kiran Limited as on 31st March is given below. Share capital, preference shares, capital, reserves, general reserve, P&L, debenture, loan, bank RD, trade payables, dividend payable, non-current assets, PP, investments, current assets, trade receivables, and cash in bank. GAN Limited has acquired the business of Kiran as on 31st March 2024 as per the following scheme of merger. So this is the case of absorption. Gyan is the purchasing company, Kiran is the selling company. Banks agreed to waive off 50% of loan of Gyan. At the time of merger, bank agreed to waive off 50% loan of Gyan. So let me check Gyan Limited. Yeah, Gyan Limited, there is a loss. Maybe it is undergoing internal reconstruction. We have done a question like this. Maxi Limited, Mini Limited. So what is the journal entry here? GAN Limited will reduce its share to rupees 2 per share and then consolidate 5 such shares into one share of rupees 10. So I'll check what is the number of shares of GAN. 65 lakh shares of rupees 10 each. So 65 lakh shares of rupees 10 each. First it will reduce 65 shares of rupees 2 each. So it is equity share capital brackets face value 10 to equity share capital brackets face value 2 to capital reduction. So now share capital is 130 lakhs. Then consolidate 5 such shares into one share of rupees 10. So 65 by 5. So now it will be 13 lakh shares of rupees 10 each. So what is the journal entry? Equity share capital rupees 2, 130 lakhs to equity share capital rupees 10, 130 lakhs, nothing to capital reduction or reconstruction account. GAN Limited will issue 2 equity shares for 3 equity shares of Kiran Limited. GAN Limited will issue 2 shares for 3 shares. So this is purchase consideration. Okay. So Kiran Limited, how many shares Kiran Limited is having? 600 means 60 lakh shares. So 60 lakhs. How many shares does Kiran Limited has? Kiran Limited is having, now Kiran Limited is having 60 lakh shares. So 60 divided by 3 into 2. Shares are to be issued at rupees 20. So purchase consideration is 800 lakhs. Preference shareholders will be paid off by issuing equivalent number of preference shares at a price of 105. Same, take the number and 105 purchase consideration. Dividend of Kiran Limited will be paid after merger to the shareholders of Kiran Limited. Okay, there is a dividend payable. So that will be taken over and that will be settled. Dividend payable to bank. Trade payables of GAN Limited include 50 lakhs payable to Kiran Limited mutual owings. Pass necessary journal entries in the books of GAN Limited and prepare balance sheet after merger. Before moving on to the answer, please don't miss out. The balance and reconstruction account should be used to write off P&L and balance should be transferred to capital reserve. Okay, that you should not miss out. So my first step is computation of purchase consideration. So purchase consideration to equity shareholders, we have already said 800 lakhs, of which 400 lakhs share capital, 400 lakh securities premium. Then preference shareholders 2 lakh into 105. 210. So total PZ is 110 lakhs. Don't forget breakup of share capital securities premium. Yeah, that we know. Then here there is no information that some assets will not be taken over. Some assets of Kiran is revalued. There is no such information given. So this is amalgamation, the nature of merger. So here, if it is amalgamation, the nature of merger, I'm comparing the paid up capital as 800 and PZ is 1010. So let's do the journal entries. Let's find out the answer and do. So first journal entry is loan to reconstruction. Okay. Share capital to reconstruction. Okay. This is fine. Reconstruction to P&L to capital reserve. Now business purchase to liquidator. Yes. Business purchase to liquidator. Now takeover entry. Takeover entry, you should be careful while doing this takeover entry. Here general reserve, when I take over, purchase consideration minus 800 to 10. Loss, that loss should be adjusted and only the balance 150 has to be taken over. Okay. So that journal entry will be tallied. 150. Then liquidator to share equity share capital, preference share capital, balance to securities premium, mutual earnings cancellation, dividend payable to bank. Then the effect, the balance sheet also we have, remember balance sheet of GAN Limited and reduced after merger. So share capital, now it is fine. I think now you can go through, and I hope that is clear. If there is a doubt, please comment below. I am discussing it on an assumption that you're all okay and you would have tried a similar question. So no need of the detailed explanation. So എന്തെങ്കിലും extra പറയണമെന്നുണ്ടെങ്കിൽ just comment below. I'll clarify it. Okay. Now 16. U Limited has obtained a term loan of 620 lakhs for a complete renovation and modernization of its factory. Plant and machinery was acquired under modernization scheme and installation was completed on 30th April. So, 1st April, you have obtained a loan for the modernization renovation of a factory. Plant and machinery was acquired under the modernization scheme and installation completed on 30th April 2024, next year. An expenditure of 510 lakhs was incurred on the installation of plant and machinery. Similar question is there in our study material. 54 lakhs has been advanced to suppliers for additional assets. Additional assets has taken substantial period of time, and balance is used for working capital. Total interest 68.2. So we'll prepare a table. Factory, machinery, additional assets, working capital. 2 extra columns. Interest to be capitalized, interest to be written off to P&L. So here, modernization and renovation is a qualifying asset. So 68.2 divided by total proportionately will capitalize. Advance, capitalize assuming as qualifying asset. Working capital, not a qualifying asset. Now 17. SP Hotels Limited enters into an agreement with Mr. A for running its hotel for a fixed return. Okay. Contract involves day-to-day management of the hotel, while all financial and operating policy decisions are taken by board of directors of the company. Mr. A does not own any voting power in SP Limited. Would he be considered as a related party? So who is Mr. A actually? What is Mr. A's job? What is his duty? Day-to-day management, while all financial and operating policy decisions are taken by board of directors. So who are the related parties? Holding subsidiary, associates, joint ventures, KMPs, individuals having exercising significant influence or control. Then entities where enterprises or entities where this KMP or this individuals mentioned in that point number 4 is exercising significant influence or control. But in the given case, Mr. A can be a KMP. But here, who's a KMP? KMP, key managerial personnel, are those who are having authority and responsibility in decision making. Here, he can do day-to-day management of hotel. But all decisions are taken by board of directors. So, he is not a KMP. So, he does not have control. He does not exercise significant influence. He is not a related party. Okay. Now, 18. Sun Limited wishes to obtain a machine costing 30 lakhs by way of lease. So Sun Limited is the lessee. Effective life is 14 years. But the company requires it only for first 3 years. So finance lease, one condition failed. It enters into an agreement with Star Limited for a lease rental of 3 lakhs payable in arrears at an implicit rate of 15%. Chief accountant of Sun Limited is not sure and seeks your advice. They are asking whether it is finance lease or operating lease. So what should I do? 3 lakhs into 3.36. 3 into 3.36. 10.08. But 30 lakhs is the fair value of the asset or cost of the asset. So here there see lessee should recognize it as a lessee should recognize it as an operating lease. You should write 5 conditions. Significant risk and reward is transferred to lessee. Is it mentioned? No. Lease term covers major part of useful life. No. Present value of MLP is at least equal to the cost of fair value of the asset. No. Lessee has an option to buy at the end of the lease term. No. This asset is a specialized asset. No, so this is an operating lease. So lessee should recognize the lease rentals as expense either on straight line basis or any other systematic basis which is appropriate. That's it. 19. Quickly, 19. The following information relates to XYZ Limited. Net profit is 37,50,000. Number of shares 5 lakhs. Convertible debentures issued at the beginning 50,000 convertible debentures issued upon conversion. Equity shares to be issued on conversion is 55,000. Rate of income tax is 30%. There cannot be a easier question than this. EPS. So what is basic EPS? 30, 37 lakh 50,000 divided by 5 lakhs. 37 lakh 7.5. 7.5 per share. Now diluted EPS, you should add back interest after tax. To the numerator, you should add back. For diluted EPS, to the numerator, you should add back interest after tax. And to denominator, you should add expected number of shares to be issued. So 37 lakh 50,000. Interest after tax is added back. Okay. 40 lakh 30,000. To the denominator, number of shares to be issued. So 7.5 is the basic EPS. Diluted EPS is 7.26 per share. Okay. Question number 20. Saharsh Limited is engaged in manufacturing of electric home appliances. The company is in the process of finalizing its accounts and need your expert advice. Instead of saying you're an expert, just prove it, show it. Okay. Okay. The company has its plant at 3 different locations. It has to shut down one of its plant due to internal reasons. The said plant site is under a rental agreement till 31st March. The rent per month is 80,000. If the company cancels the agreement, it has to pay a penal amount equal to 6 months rent. Or if you cancel, there is a termination penalty. 80,000 into 6 you need to pay if you cancel the agreement. The company has also an option to sublet the site at a rent for 45,000 per month. So even if I sublet, I'll get only 45,000. Here, what I need to do, if I am cancelling the contract, I need to pay 80,000 into 6 as the penalty. Okay. If I don't cancel it, then I need to pay 80,000 per rent every month, but I will get 45,000. So if I don't cancel, 35,000 will be the net expense. But if I am not cancelling, I need to pay for the full year. Full year I need to pay. If I cancel, this is my penalty. If I don't cancel, I need to suffer 35,000 into 12. So here 80,000 into 6, 4,80,000. 35,000 into 12. If I don't cancel, I need to continue with the contract for that 1 year, then 4,20,000. Anyway, if I cancel or if I continue, there will be a loss for me. How much will be the loss? 4,80,000 or 4,20,000. You should create provision for whichever is lower. That is 4,20,000. Okay. Now, a case has been filed against the company in the consumer court and a notice for levy of a penalty of 20 lakhs has been received. The company has appointed a lawyer to defend the case for a fee of 2 lakhs. 50% of the fees has been paid and balance 50% will be paid after finalization of the case. There are 75% chances that the penalty may not be levied. So 75%, more than 50% probability that there will not be a liability. So no provision will be created. But provision should be created for the legal fees of 1 lakh. We need to create a provision for that 1 lakh. Now, the company had committed to supply a consignment worth of 1 crore to one of its dealers. Okay, we already committed to supply 1 crore worth of goods. As per the contract, if delivery is not made on time, a compensation of 15% of the value is to be paid. Okay. Okay. While consignment was in transit, one of the trucks carrying goods of 30 lakhs met with an accident. It was, however, covered by insurance. According to the surveyor's report, the policy amount is collectible. but to 10% deduction. So there is a loss of 30 lakhs. But after deducting 10% means 27 lakhs you will get. 3 lakhs loss, for which we need to create provision. Before closing the books of accounts, the company has received the information that the policy amount has been processed and dealer has also claimed for the compensation. So you should create provision for this 3 lakhs and also that 15% of 30 lakhs. 4.5 lakhs. We need to create provision. In the answers, they have also written 15% of 30 lakhs is the best assumption, but you may assume not on the full amount. That is not an appropriate assumption. 15% on only 30 lakhs is not supplied, right? So 15% on 30 lakhs. Provision needs to be created. So I'll read the answer. So first, onerous contract. So first one is with regard to onerous contract, unavoidable cost exceeds the benefit. So we'll calculate these two lower. Second case, evidence available that there is no obligation, present obligation. 75% chance that penalty may not be levied. No need to create provision, but provision should be created for the balance 50% fees. Then loss due to accident 3 lakhs plus 4 lakh 50. Then alternatively, it can also be assumed that it is on the contract amount. But it is better to do it on lost value 30 lakhs. So that's it, guys. This is a quick discussion of all these questions. So do well. നന്നായിട്ട് work ചെയ്തോ, because today's April 7th. May 7th your advanced accounting exam is done. കഴിഞ്ഞു. So ചെയ്യാവുന്ന maximum you should do. Okay, so take care. See you in the next video.